What's going on, guys? What's going on, everyone? What's going on? Hope you guys have had a good start to the trading morning. Currently looking at the 2-minute time frame here, looking at the NASDAQ 100. Got initial balance levels here. We kind of swept that initial balance low. We've pushed off of that. Buyers stepped in definitely here at the initial balance low, kind of pushed back up into the middle of the range here. Again, we're scalping today. Nothing really changes. Looking at the 20 SMA, looking for momentum shifts, and we're just looking to capture a little piece of that. So, all in all, decent little trading day. I don't know if I'm going to really take too many more setups. Maybe, might not be opposed to taking one more on a little bit smaller size. Some of the trades that I took this morning were leading into the market open. We had this 20 SMA play here that kind of set up 6:26 in the morning Pacific Standard Time. It took 4 minutes to confirm. So the high price there was 19,935. It shot up to a price of 19,941. So it was out in this 2-minute candle there. We had a short position that set up here at 726. Obviously, don't even need to go over the math there. That one confirmed to the short side here. We're not looking for that much. We had a back-to-back short setup. So if you look at 926, look at the following candle. At 726 Pacific Standard Time. Look at the following candle at 729. That confirmed. Then you had another one at 736 that confirmed at 738. So those were the two plays. That was 3 trades there. We also had a couple more here that kind of set up. We had a long that set up and confirmed. We had a short that never confirmed. We had a long that never confirmed. And then we had another short position that ran into those initial balance lows. And then we've had a few choppy little plays here. But again, even though this range is a little bit choppy here, this setup here at 8:22 in the morning, high price was 19,974, goes up to a price of 19,982. So even this play here would have hit before quickly retracing. Again, just kind of make sure you have that automated take profit there, so you can make sure you get filled, right? Short position here also worked, and then we're in a long position that also works. So again, if you're looking to kind of scalp this market and you're not looking for these continuous all-day moves, you can do very, very well. The only thing that's really going to be difficult when you are scalping a little bit of a higher win rate percentage strategy is knowing when to take your profits and call it a day. It's knowing when to kind of, hey, I took a loss or two here. Maybe I need to trade another account. Maybe I need to, do something different. Good little push up here. Again, kind of coming up to the initial balance highs here. We do have highs that kind of set in here at 7:22 in the morning Pacific Standard Time. That price is sitting at around 20,024. So again, pushing back into this previous swing high here, going from 746, to about 8 o'clock in the morning. Anytime we kind of first test a prior swing high or level of supply or demand, you can always kind of expect that initial test, basically buyers kind of seeing, do we have more people that are sitting on the table here that are comfortable pushing prices higher? If not, typically speaking, you'll see that little bit of a pullback, and then buyers are more comfortable getting in at a lower price. And if the market is going to continue to be strong here, then we should see some type of breakout out of this initial balance high. And if that's the case, NASDAQ can really start to get going. As far as looking for a short position in this type of environment here, like where, let's say, for example, you're trying to call the tops here, a little bit dangerous because since market open, we've been trading in the same hour range. So market's been open almost 3 hours here. Okay, it's almost been 3 hours worth of trade, and we've essentially been within the same range. Now that range is going from about 19,920 to around 20,020. So it's not that big of a range, right? We're trading within 100-point range here. Again, I have no idea what BBG pullback means. I have no idea what that means. Whatever. But again, when you're trading with inside of a range, you definitely look for opportunities to play with inside the range. So again, don't try to be a hero. Don't try to, call the breakout. Don't try to call the top here. Again, just wait for your setup, right? Wait for your setup. Mm. Melissa, what time frame were you trading in, and what particularly chopped you up today? Are you looking for, is it because you were looking for more extended moves, and let's say you go into profit and then it kind of pulls back against you? Is that type of situation that was happening? For me personally, in this market, again, market's trading at all-time highs, right? Price action is very premature up at these levels, so I'm really not looking for extended moves. We get in a nice push high here. I'm really not looking for moves that are too much, right? I just want to get in, kind of take these base hits, and kind of just continue to turn the days. Just allow the price action to trade up in these ranges for just a little bit more, right? I mean, we need to test highs, we need to test lows, we need to create baselines. We need to see, how comfortable is price in these areas. Um, Getting that first break here of the initial balance highs. So that first test there broke initial balance highs, swept. Look for the little bit of a pullback, and then if we do kind of take out the initial balance highs, there could be a little bit more in there. Melissa, just cut that take profit in half a little bit, 4 to 6 points. You'll have a little bit more success. I do all my charting on Thinkorswim. I trade options, so I've been charting with Thinkorswim for years and years and years now. I execute my trades for futures on TopStep X. I also execute them on TraderVate, depending on the platform and the prop firm that I'm trading with. And those are on other screens that I have here, but all my charting will be done on Thinkorswim. Trading View is also good. That's kind of what TopStep X is incorporating into their platform, is the Trading View charts. I like Trading View as well. But yeah, I mean, for trading futures, I really don't Don't do any charting on those other platforms, just to execute orders. What's going on, Zeke? Fire drill was yesterday on Top Step. Yep, throwing out discounts on those 100K accounts. Yeah, mainly just been focused in the Discord a lot lately. Again, just kind of working on this scalp strategy, kind of doing a lot of forward testing and stuff. So everything's all good on this side. Yeah, I got a code, Naz. I got a code for some 100Ks. Yeah, good trade yesterday on that options trade. It was a nice setup that I normally look for a lot. Big extended moves down, big extended moves up, and then kind of looking for that reversal. I want to see some type of consolidation, and I want to see us reclaim a 20 SMA with potential, right, with space. So again, it played out pretty well. Obviously, I didn't catch the whole move, but again, that's fine, right? I look for one thing particular, that's to get targets that I'm looking for based on the ATR of what the stock is trading at, and if I get it, it's a win for me. If not, it's always someone else's money out there for a little bit longer. But I'm a little bit of a short-term trader, scalper. I'm not really gonna hold positions too long. Over a series of 100 trades, Zeke, it's profitable. Again, you could take 10 trades and be profitable. You can take 20 trades and be flat. But over a series of 100 trades, it's definitely profitable. What's not profitable is the trader, you know, mix matching their size. Playing one contract, playing three, playing five contracts, playing two. Looking for other areas of opportunity, not being able to handle a loss, and then revenge trading, all that stuff. That's what becomes unprofitable. The strategy itself is profitable. You just have to work it. Again, we're all human, though. We make mistakes. I'm not perfect either. I've had days where I've been up $300, $400, $500 and given it all back because of my stupidity, right? But again, that's being a trader. Best traders will always try to find opportunities to protect their capital, right? Because trading is all about coming into tomorrow. Right? What we do today, what happens today, whether win or lose, is completely irrelevant over a large body of work, right? Over a quarter, over a year, 3 years. You can use the strategy on any platform. The platform really doesn't have anything to do with the strategy. Just the setup is the setup. Doesn't matter which platform you execute on. Typically for me either. So typically a little bit in the pre-market and right off the open, either I'm going to take a couple quick winners and I need to turn it off, right, and wait, or it'll be a couple quick losers. But normally speaking, going into lunch hour, which is about right now, coming out of lunch, there might be a particular setup, but the last 2 hours of trading, I typically stay away from. I don't really care if something's running, 1,000 points. It's just not worth it for me. I've been burned more times than not. Price action volume tends to dry up a little bit more, and I'm very impatient. When I see a setup, I want the setup to work right now. Okay, and if it doesn't work right now, then I want it to be wrong right now as well. So I want to know, am I going to be right or wrong? Typically, you're going to know relatively quickly with inside 5-10 minutes whether your position is working out or not. Now, again, that's for scalping. Of course, if you're a little bit of a zone trader, you're a range trader, yeah, you can have longer hold times, longer areas of opportunity where you can try to hold these particular positions. But again, when scalping and day trading is completely different, right? A day trader is looking for, that just means that you're going to make multiple trades on the same day, in and out round turns. A scalper is just looking to scalp a few points or a few dollars or a few ticks off of a specific setup. Yeah, Tom. This is 2 minute with ATR and volume, 20 SMA. Yep. Keep it very, very simple. The black box is just the first hour of trade range. So I typically like to see, is price action trading with inside of a range? How big is that range? Typically, if we break out of the first hour of trade, we can tend to see a little bit of a pattern start to form on the day. Also, you tend to get, sometimes you get a sweep of the lows and the highs of that initial balance, that first hour of trade. And then you can see a reversal. So you can see that low that we put in today kind of swept the bottom of the range, and then immediately buyer stepped in, trapped, and pushed it back up to the top of the range. So all in all, this is a range bounded trading day. However, there's been some opportunities. So it's sitting at around 100 to 120 point range that we've been trading on, but there's been plenty of opportunities to kind of, take those scalps. Now, again, if you're a trader who's looking for 20, 30 points, right, on the NASDAQ, not ticks, points, if you're looking for 20, 30 points, it might be a little bit harder to catch those big moves on a ranging day, right, on a consolidation day. If you're a scalper and you're looking for a lot lower of a price target, sure, you're able to catch some of these moves back and forth. Nice, Aziz, nice. Good job. Yeah, anytime you complete a combine, definitely lock it out, or anytime you have a decent day, lock it out. Again, on evaluations, depending on the strategy that one's trading, as far as, how long you're looking to pass. Because again, trading evaluations is completely different than trading funded accounts. There's people who will go out there and take an initial investment of, whatever, let's say a couple $100, buy multiple accounts and try to pass them extremely quickly, which is completely fine. I've done that in the past. And there's other people who want to trade a little bit slower, more in the sense of how you would trade real cash or in a funded account. And it's going to take a little bit longer to trade. But all in all, if you're making, you know, 150, $250 on a day, it's always a good day to kind of stop out. Now, I understand that that's not going to be the most flashiest of a P&L, right? I mean, you know, again, take a look at social media, everyone making $4,000, $5,000, $10,000 a day, make it seem so easy. But again, a lot of these big days are being copy traded across 20 accounts or 10 accounts, or so be it. And or they have much larger account sizes than, you know, maybe you would have. And again, you know, even $150 to $250 a day, you're going to be passing most of these evaluations in 2 to 3 weeks, right? Some days you're going to have some great days, some days you're going to have some scratch days, you might have a couple losing days in there. But all in all, you know, all you need to really do is just let the days kind of compound. Now, if you're taking the approach where you want to pass these things inside a few days, inside of a week, then yeah, you're going to have to get aggressive, but you're also going to have to understand you're going to lose some accounts along the way. You know, taking 5 mini contracts, trying to bang out $500 to $1,000 a trade, sure, you can pass these things in a few days. But again, you're always going to have that one potential trade that is going to kind of knock that balance down and or below the account, which is fine if you're taking it if you're looking at it from that perspective, right? If you're looking at it in a sense where, you know, let's say we'll use Top Step for example. Let's say their accounts cost $50, right? Again, I'm not talking about fire sales, I'm not talking about deals or discounts or whatever you got. Their average price is around $50 for a 50K account. If you go out there and you buy 5 accounts, you're looking at, you know, $250 investment. If you're okay with losing $100 off that, you know, to potentially pass 2 of those accounts, because you're going to trade a larger size, then that's built into your business plan, right? It's just a cost of doing business. It's a business expense. A lot of times people will go out there and buy multiple accounts and they'll trade heavy size and they'll get upset when they're losing accounts. But you're trading size that has, you know, you're trading number of contracts that is not suitable for that type of drawdown, right? Especially on Top Step where they're going to lock you out after $1,000 loss. It's just not enough drawdown. So again, you know, which side of the fence do you fall on, right? Are you looking to take a more realistic approach? Then I would say anything between $100 and $250 is worthy of considering stopping out on the day and protecting those gains and coming back. If you want to continue to trade, we'll go buy another account, right? Because you think about it like this: if I trade options, right, I trade my options account. Well, if I want to make another trade, I've got to have money in my account, and if I do lose that trade, you know, I'm going to be down, you know, hundreds of dollars, you know, $200, $300, $400, based on my position size per trade, right? And some people would get upset that they lost a funded account that cost, or a valuation account that costs $50, right? It's a cost of doing business. Look at each account as a $50 trade, right? Or if you're on Apex and you spent $20, $30 on an account, look at that account as one singular trade. So you're going to be able to take multiple trades, which you should be able to take multiple trades unless you're being, you know, completely reckless. But you should be able to take multiple trades on that account before even having the potential to lose that account, right? Arrows are closes above the 20 SMA. The black box is the first hour of trade range. So I'm in California, so between 6:30 7:30, that's our range, right? That's the first hour of trade range. So far we've swept the bottom of the range, we've swept the top, right? And we're kind of still trading with inside the middle. Now, if we can confirm the highs of this initial balance here, this would be worthy for me of a scalp position going long. Same way as if we take out the lows of the initial balance low, would be worthy of a short position for me. Everything else in between, I would be looking for a scalp, you know, trying more so to, you know, wait for this 20 SMA to kind of come in play here before I do take a trade. But again, you know, depending on what your balance is right now, one should obviously at this point in time go into protection mode. So you don't want to take one potential trade that could wipe out everything that you've done on the morning, right? So if you've been trading, let's say 1 mini contract, maybe you should trade 5 or 3 micro contracts. If you've been trading, let's say 5 micro contracts, maybe you should trade 1 or 2 micro contracts. That's just to kind of protect that overall P&L. That's going to help the equity curve. A lot of times traders will take, you know, 1 winner, 2 winners, 3 winners, and then they increase their size and they take a loss and they give it all back, right? That's how you are going to keep spinning your wheels in the mud, right? At some point in time, every trader who's going to be successful or actually make it to consistency or profitability is going to understand that, you know, not every day is the same, obviously, and you're going to understand that you've got to be okay with what you got, right? So it's greed factor, it's, you know, FOMO, it's anxiety, it's, you know, having the urge to kind of keep up with the Joneses, right? Which means, you know, you see everyone else on social media doing XYZ, you want to do the same, right? I get it, but focus on yourself, right? Focus on yourself at the end of the day. Yeah, Tom, I mean, again, you know, playing around in the middle of the range is never great. It's never great, especially depending on specific strategy and kind of take profit metrics. Sure, you know, if you're playing in the middle of that range, right, and you're looking for 20-30 points, you know, that win rate probability is probably going to go down to 30 to 40%. Again, I don't recommend anyone doing this, but let's say someone, you know, has a setup and they're looking to take, you know, 5-6 ticks, right, in the middle of the range. I mean, maybe that win percentage goes up a little bit, but again, that's extremely hard to do. You have to take a lot of trades to kind of, you know, make a day out of it. But yeah, I mean, for the average trader out there, you should definitely wait for setups that are either at the top or the bottom of the range that are going to give you more potential, right? It's going to have more potential. You need to wait for the breakout or breakdown and confirmation. So now that we've broken out downside, broken out high side, you kind of want to wait for the confirmation. Confirmation. So I mean, again, it's going to be very, very simple. You know, everyone has a different definition of confirmation, but I'll use what my definition is, right, which is going to be pretty accurate to most. So if for example, the range that I'm looking to play, okay, for a breakout or a continuation flush, if I'm looking to play this first hour range, which is just the initial balance, right, from the first hour of trading, so New York time, 9:30 to 10:30, we're going to take that range. You can see here this black box on my screen. We've been trading with inside the range, okay? Well, you can see here, I'm in California, so I'll speak in California time. At 8:10 in the morning, we break down below that first hour low, okay? You can see here at 8:54 Pacific Standard, we break out over initial balance highs. So a confirmation for me would be price, okay, would be price confirming the high of that initial break, okay? So think about it like this. Once we break that opening range, there's a pivot that gets set, right? That pivot point or that pivot level, that pivot price, whatever you want to call it, I'll call it a pivot. That pivot point is going to be, the price is 20,028. So if price breaks 20,028, for me, that would be confirmation of breaking out of this range. Now, here's another way that people are going to look at confirmation. They will look at this break, right, and want to see price continue to put in a new high and then pull back, okay? Pull back into this range, consolidate, and then look for the move higher, okay? So we've broken initial balance highs. They'll want to see the new high and multiple candles get put in. They'll want to see some type of backtest back into the range. And then they'll look for some type of holding pattern here, either a doji candle, something to happen here. And then they'll try to get in on this bounce. This is a break and retest of this specific zone. And then they'll take this trade. Now, in these particular trades, this is more someone who's a zone trader, right? You're a little bit more of a range, like a range trader. Maybe you're a dollar cost averaging trader. Maybe you're someone who looks to build into positions and hold those potential moves for longer. Okay, nothing wrong with that. That's a model in itself. The way I trade, okay, the way I trade is I'm looking for scalps. So for me, I've broken the initial balance highs. Great. All I want to see, I don't need to see all this break, retest, and then hold and go again. The price was broken once. Buyers pushed through the first time. Now we've pulled back. right? Where we've already pulled back. If we take this out, I'm going to look for a scalp on that momentum. So I'm going to be looking to take profits on this first move versus waiting for a first move in structure to build and then hold and go up. Again, no way is right or wrong. They're both fine. It's just, what style are you looking for? What style of trader are you? A confirmation for me again. So this is for Grace. So I hope that answered review channel. I hope that answered your question. Again, like for Grace, I'll give you an example here. If I was looking for a 20 SMA play, okay, I get the close over the 20 SMA. Great. Okay, there's a close. That's my that becomes just what I call my reason why candle. So the reason why I want to take the trade is because price action was showing me it's lost and was trading below the 20 SMA, and now there could be potentially a short-term change in trend. Price action has pushed back over this 20 SMA. Okay, so with that being said, this reason why candle, the high in the same situation I just kind of drew out here, the high of that wick or candle, whichever is higher, because sometimes there's no wick on the candle, but in this particular case we have a little wick. That wick now becomes the price I'm looking to take, and that's my confirmation. So I'm not waiting for a following candle to close over my reason why. No. The candle is already closed over the 20 SMA. That's the whole reason I want to take the trade. What's gaining me interest in taking this trade. So all I'm doing from there is just waiting for a following candle, and typically it's between 1 to 3 candles. If it takes a little bit longer than that to confirm, normally I'll just shove that trade to the side and wait for another setup. But as soon as price, which here at 838 breaks, right, that reason why high, I'll be getting into the trade. Now, the reason why candle high on this potential trade was 19,964. This goes up to 19,970 and immediately pulls back. I'm going to give you two scenarios here. For example, I've been looking at a 5-point take profit between 4 and 5 points. Okay, so in this particular case here, I would have been auto sold out of this trade for a profit, and then it would have pulled back. Does that mean that I knew it was going to pull back and I'm some amazing trader that, you know, I just manually hand pick the top of this range? Of course not. I just have a range that is small enough on my take profit to where if I do get a little bump, it's going to give me profits. Now, some people manually market order into this. They don't have a limit order to sell. They don't have an ATM strategy to sell out at 4 points, 5 points, 6 points, whatever you want to set your take profit at, and you're kind of manually getting filled in here. Let's say there's a little bit of slippage here and you don't get the 5 points on this particular move, and then it does pull back. A lot of traders tend to get scared. They tend to see this 15-point pullback and then they get panicked and they sell out, and then look what happens, right? So imagine this. Let's say you get in with one mini contract, okay? Well, if you lose 10 points, it's $200, right? So if you lose 15 points, which is what this pulled back, you're going to be down anywhere between 240 and 260 at this particular time. At this particular time, you're going to be down 240, 260. Now, if that's too much for you to handle, you can't trade one mini. You got to go down to maybe micros, right? Nothing wrong with that. Trade micros. So at this particular time, if someone didn't have that automated take profit there at 4, 5, 6 points, you didn't get filled. Now you're sitting through 250 drawdown. Great. Your stop loss is still going to be a close below this 20-period moving average and or your reason why candle here. Now, this is a 22-point range here. So, if you are trading one mini contract and this did stop you out, potentially it could be, a $400+ loser on one mini contract. That's a lot, right? That's a lot of money. So maybe you need to adjust. Maybe you need to trade micros, right? Depending on the account size, depending on your level of comfortability. The only thing is that so far this strategy has been proving to hit at a very, very high win rate percentage. Look at this trade setting up right now as we speak. The low price on this 20 SMA play 2-minute time frame, the low price was 19,997 and it shoots down to 19,991. Guys, if I wasn't talking, I'd be in this trade. Who took this trade? This was a quick and easy confirm, take your 5 points and get the hell out, right? It's a done deal. And look and this candle really hasn't done much, right? But again, if you're just looking for that quick shift and change in the momentum, you're looking for those quick scalps, and you can stay disciplined and you can stay disciplined, you would make some money, right? No, the whole key here, guys, is just having confidence, right? You got to have confidence in something, in whatever it is that you're doing. It's very hard to have confidence when you haven't back tested on your own. It's very hard to have confidence when you haven't, forward tested a lot of this stuff, right? So some of you guys who may follow my YouTube channel, maybe you guys trade with me, maybe you guys have watched one of my videos. Again, it's going to be very hard to believe things. It's going to be very hard to trust things when it's fresh, right? Think about the first time you started driving. How nervous were you? Some of us really nervous, some of us not so much, right? But the first time you merge onto the freeway, it's a little nerve-wracking, right? Especially if you're a newer driver. So again, what's the only way you're going to get better at it, right? Like, how many of you right now jump in the car, go down the road to grab something to eat, and are thinking about traffic, are thinking about the speed, or thinking about this? No, it's become second nature, right? Why? That's because years and years and years of driving, it becomes second nature. Now, again, anything can happen, right? You can get into the car, we can go down the road, someone can get into an accident, run a red light, this, that, and the other. It's the same thing in trading. We can get into a trade, even though we've done it over and over and over, and that trade can confirm it and just quickly take you out. That's part of the game, right? It's part of the game. The point that I want to make is that a lot of traders think that once they stumble upon a strategy and it works for them a little bit, that it's the end all be all and it's never going to lose, and they're never going to, be confused. They're never going to have a day where price, is just absolutely chopping you to shit, right? But the thing is that you have to understand, every day provides opportunities to trade. I don't care if it's the most range bound market, you're going to get a trade or two. Like, whether they win or not, it doesn't matter. You're going to get a setup. I've been doing this 10 plus years. There's a setup every day. Like, there's a setup every day. If there wasn't a setup every day, or multiple setups every day, there would be no market. This market is between buyers and sellers. Buyers fighting for price, sellers fighting for price, emotional people, getting stopped out at specific levels, which we call technical analysis. Could be moving averages, supply and demand, whatever you want to call it. There's always a battle for better price going on here. And there's always an emotional point of control between buyers and sellers that is going to cause a price to fluctuate up and down, right? So once we understand that, why would any one particular trade hurt us? Why would one particular day be the end all be all? Like, oh my gosh, I don't get this. I can never do this. Tomorrow's going to be a completely different set of trade setups and different set of opportunities. It's just that as humans, we've got caveman brains, and we think that, oh my gosh, we need to make everything today. Oh my gosh, I need to pass this prop firm evaluation today. Oh my gosh, I've been trying to learn this for, a year, and I'm not having any success. You're not having any success trading 1, 2, 3, 4, 5 years down the road. It's because you are limiting your own success. You're not believing in what you're doing. You're not giving what you're doing enough time to work out, whether that be because, you're emotionally too attached to the money that you're trading. And if that's the case, I would definitely recommend someone to take a little bit of a break from trading. There's a lot of people who go out there and they'll spend, they hear about trading, they hear about these prop firms, they'll go out there and take $100 and try to pass these prop firms in hopes of making thousands in the first month of trade, and they go lose those accounts, and they don't have the financial stability to be able to afford, to get more valuation accounts or deposit more money into their personal account or whatever. That's not a particular spot where you want to trade. Look, at when I learned how to trade, the person who taught me how to trade, which is a family friend of mine, he's been doing this for a while, over 30 years now, told me, if you don't have money to lose, you're not ready to trade. Okay, it's point blank. Now, is there situations where people come in with a very little bit of money and are able to find some early success? Absolutely. Okay, however, it's not the norm. And the more money you have, the more money you're going to make. Okay, it's that simple. The bigger your account size, the more money you're going to make. You don't need to make more. You don't need to necessarily make more per trade. You just need to make the same, just increase your size. So for prop firms, that could be something as simple as, You know, instead of trading one funded account, you have two. So instead of making $1,000 a month, you have two of them that are hooked up to a copy trader, and you make 2,000. Doesn't necessarily mean that you need to, you know, make more money per trader per day, right? The more money you have, the more money you will make. And when it comes to trading prop firms, that means the more number of accounts that you have, guys. The more number of accounts that you have. Great trade there, guys. Who took the 5-point take profit on that long there? Anyone take the 5-point take profit on that long? So do we see how that works here? This 2-minute setup is going to confirm, right? Just confirmed. So you have 9:26 PST. Candle closes over the 20 SMA. Okay, that's our reason why. Following candle confirms, meaning it just took out the price. The high price of this candle is 20,014.75. This next candle goes to 20,020.75. You know, and it pulls back. Now, great. Let me give you a scenario. Here's again, is 5 points the end all be all? Like, is it some secret here that it's always going to hit 5 points and turn back around? No, sometimes this thing runs up 30 points. We get out at 5 and we're sitting there kicking ourselves in the ass that we could have taken another 20 points. That's great, but I'm not going to kick myself in the ass if I was looking for 5 points. Here's the situation that happened yesterday in the pre-market. Yesterday's pre-market was absolute shit show. By the time I got on the screens, there was some people that were trading with myself and Evolution Traders that lost, you know, 2 trades back to back. By the time I get into the market, the first trade I take literally confirms, goes up 4 points or 4.5 points, and then comes all the way back down to stop me out for a $200 loss. So right now, my stop losses have been around $200 to $225. Stops me out. Great. I started looking at the trades in pre-market and noticed that it was only getting between 3 and 4 points on the 3 or 4 setups that was happening. I was expecting, okay, if the range is going to be a little bit smaller here, I need to do something, right? As a trader, we're humans, we can make adjustments, right? It's just like this. You're in a relationship with someone, a brand new relationship with someone, you've been dating them for 6 months, you found out that, you know, this man or this woman is all over town cheating on you. What are you going to do, right? Make an adjustment, right? You're going to sit there and continue to, you know, put yourself through the ringer, or you're going to make an adjustment and walk away from the situation, right? So you have two decisions that you can make in that particular situation. You can walk away from the situation and just tell yourself, okay, I'm going to take this on the chin and I'm going to leave and I'm not going to trade anymore today. Or you can make an adjustment. So the adjustment that I made was I'm going to cut my price target down to 4 points and see if I can battle back 2 trades, right? If I can win one, great, I'll take another trade. If that next trade I took was a loser, I'm going to have to stop eventually, right? That's just, the market's not going to give me what I need today. That's not my fault. It's just whatever. It is what it is. Next trade I took luckily battled me back, so it was an $80 win on one mini contract. Great. So now I'm down 120. Did it one more time. It hit for 4 points. Now I'm only down $30, $40 at this point in time. Great. Now we can go back to my 5-point take profit. Markets opened up again. Boom. Come back in, go back into the green, and then boom, double my size on the next one, and then ended up being able to stop out. So it went from taking, you know, the setups in the pre-market yesterday were, you know, 2 or 3 losers at 5 points, to then hitting 2 4-point trades back to back, and then getting that fifth trade on a double size, which was 2 contracts. And the reason why I went to double the size is because at this point I'm break even back to the positive. If I take the loss, it's just like taking my first loss of the day and then we move on from there, right? So again, you have to be able to make adjustments. And again, you know, you're not always going to have days like that where you do, you know, able to battle back. Sometimes you just take 2 or 3 losers in a row and you got to just call it quits. At that point in time, what I would do personally is either, you know, stop trading altogether or go get another account, right? Go get another account if you want to still continue to trade. If you don't, then just walk away. I also like that idea too, you know, taking 1, 2, 3 trades, and if those trades win, size down, and if you take a loser, call it a day, right? Call it a day. A lot of times, especially newer people in this business who haven't been here for a long time, you think that because you have a strategy that this turns into some type of video game where the longer I sit here and play the video game, I'm going to keep advancing to the next level. It's simply not like that. It does not work like that, right? For me personally, if I win these little baby scalps, right? These are 2-minute scalps that I'm looking at, 2-minute time frame. If I go up 2 or 3 of them, I've got to seriously be thinking about cutting my size all the way down, or I need to stop. I need to stop, right? Like altogether. This actually set up here short. I missed it because I'm over here ranting and raving. This one was short for 5 points as well. Tom, how do I use ATR? So again, you know, I haven't really been using the ATR much lately. I use it for options. So let me give you an example here. Let me give you an example. Tesla had a phenomenal day off the open, right? Let me show you something here. Tesla had a phenomenal day off the open. Okay, let's show you this Tesla chart. The cleanest play to have taken on Tesla was a break of pre-market highs. Very simple, right? But again, how did I know that Tesla was going to explode through pre-market highs and just continue to run? I didn't, right? I missed this trade. I was trading futures. It is what it is. However, look at the first. Let me pull up the 5-minute time frame, because I don't look at the 2-minute for don't look at the 2-minute for options. I trade 5-minute. The clean and clear play here on Tesla off the open was the break of pre-market highs, right? I mean, look at the price action in pre-market. Pretty nothing, right? Pretty flat. Pretty flat. You know, taking a break over pre-market highs would have been a nice little scalp. However, the first 5-minute candle was also a 20 SMA play. Okay, so what I'm going to look at here is I'm going to look at this ATR during this time frame that my setup presents itself. Okay, so the ATR at this particular time, we're talking about 60 to 70 cents. Okay, around 71 cents or so. Let's call it 70 cents. If I get into this trade on a confirmation, right? Here's the close of our reason why, right? So my pivot becomes the top of the wick. What am I looking for? Following candle to take out price of the previous reason why candle's high. Boom, I'm going to get in. So getting in at 6:35 in the morning, okay? If this continues to rise in price to that ATR, I've got to sell half size. Now, my position sizing on Tesla is anywhere between 10 and 12 contracts. So automatically 5 to 6 contracts are going to come off the board at the ATR. So high price, let's just run the numbers. High price 190.75. Okay, this candle goes up to 193.41. I mean, just an absolute monster move. Absolute monster move. I mean, dollars, right? Dollars. This reminds me of old school Tesla, what I've been waiting for years. One of the most favorite stocks I love to trade, right? So as soon as I get up 60 cents, I'm going to sell half size. If I get up $1, if the stock price moves $1 in my favor, typically speaking, 90% of the time I'm out. You know, I don't got the stomach to hold through all this in hopes of making an extra $2 or $3. I mean, again, would I have made a lot more money on this potential trade? Of course, but you know, I have a specific way to trade and I know what's comfortable for me. So I'm not going to deviate from that just because of one anomaly here where Tesla decides to go from 190 to 195. Because it'll be my luck and it'll be someone else's luck that we tell ourselves, well, I remember that one time I sold Tesla up $1 and it ran, you know, $4 more. I'm going to hold this next time. It goes up $1.50 and it comes all the way back down, right? I've got a specific way to trade. It's comfortable for me. I like it. Works for me. Blah, blah, blah. So that's how I use the ATR. For futures, I use the ATR like on the 5-minute time frame when I'm playing smaller size. Again, not on mini contracts, only on micros. This is what I'll use the ATR for. Okay. So here's and I use it on the 5-minute time frame. So here's a 20-minute or 20 SMA play on a 5-minute time frame. Okay. It happens at 6:40 in the morning, so 10 minutes after the market opens. The high price here is 19,954. I'm going to look at the ATR at that specific time. The ATR during this specific time was around 19 points. Okay. So what I'm telling myself is the range of this reason why candle is 33 points. Do I want to be a stiffler and say I need to get 33 points? Again, full transparency and disclaimer, you would have got the 33 points. But I'll use ATR telling myself, okay, if the ATR here is 19, 20 points, if this move after I get in, which is going to be this candle here on the confirmation, if I get in and I get 19, 20 points, I'm going to be out. That's good. I'll just take the ATR. I'm out. That's how I use ATR. You could look at the short setup here at 8 in the morning. The range of this reason why candle was 30 points. The ATR at this specific time was 28 points. So it's about a 1-to-1 here on this range candle. You know, sometimes when the market's choppy, Tom, so let's say the market's real choppy, even though this market looks choppy today, sometimes the ranges are smaller. Like this range on the ATR, 23 points is great. I love that. I love that because that's going to give us volatility. We as a trader, everyone wants volatility until volatility is too much and starts shaking you out. But you need volatility, right? Because you got to have those ranges. But let's say, for example, I'm looking at a 5-minute time frame, and the ATR is, you know, nestling between 9 and 12. There's no range there for me, right? There's no range. I'm not in. Let's say my reason why candle is 30 points. But we're only ranging 9 to 12. How am I going to expect to truly get 30 points if we're only ranging 9 to 12 on average, right? So if that's the particular situation, let's say I can also do this for a little bit of a higher win rate percentage. If the reason why range is 30 points, our ATR is sitting at 27, 28. I might take the range of the ATR and cut it in half. So what's half of 30? 15 points. What's half of 28? 14 points, right? So I might look for 13 to 15 points on this short setup. And if I get it, great. I'm going to get it and get out. I'm working with the ATR, right? I'm not going to sit here on this potential short position and say, well, we tried to break highs and then back tested and put in a lower high. And now that we've pulled back, we're going to take out this low of day and just continue down all day. That's stupid, right? Because anyone who did that, you just got trapped and you got short, you got ran out of that short position, right? Again, I'm a scalper. I'm not like a hyper scalper where I'm just looking to take a million trades a day and take like, you know, 4 ticks or 1 point or anything. But again, you know, I'm going to take a handful of trades a day, but I'm going to look for smaller ranges. You know, 5 to 10 is generally my sweet spot. I'm really testing this 5-point take profit here. So a lot of my take profits have been at 5 points for the past couple of weeks. Yeah, I always believe in risking 1 bar. Never more than 1 bar. Because again, let's say for example, you don't like the scalping thing, right? You don't like taking, you know, quick 5 points, quick 10 points, or even half the ATR, and you're looking for moves, right? You're looking for big moves, right? You're looking for these waves. Essentially, you know, we've never closed below the first 5-minute 20 SMA reason why. We wicked below it, we never closed below it. Okay, so I need to close below this reason why to get me out of the trade. Typically, you know, if someone, they could have been they could have got in this trade at 19,954 and they would have rode this all the way up to 20,024. Right? Think about it. 70-point move, high to low, entry to the high price. So, you know, but that's not the way I trade. But again, there's traders out there like that. I mean, you can definitely ride the wave. You know, you never want to give it more than 1 bar, of course, you know. Like, for example, just take this 845 long position on a 5-minute time frame. My stop loss has got to be here, right? It's got to be here. It's got to be a close below that, right? For this long. What would my take profit be here? The range is 22 points. The ATR is 27 points. So, you know, maybe 20 to 25 points, which you got. Again, if you're looking for those quick trades like that, if you're looking for an all-day mover, well, then your stop loss remains here. You're sitting through the pullback. You're hoping that it holds here, and then you're hoping that we break this high and continue to run. Yep, good stuff, Brando. Good stuff. Two-minute or 5-minute, whatever you want, doesn't matter. If you like smaller smaller time frame, faster setups, go 2-minute. If you don't like how fast the 2-minute works, you can go 5-minute. I use both. Last 2 weeks I've been using the 2-minute time frame. Guys, who took the short position there? I'm over here talking about the strategy. There was a 2-minute setup here short that confirmed and went. Who took it, right? Doesn't matter. Again, I'm never one to say like you have to use 2-minute, you got to use 5-minute, you got to use 15-minute, like, you got to use 1-minute. Guys, it's all the same. The only thing that changes between the time frames is the level of moves, right? The level of moves. Again, I mean, if you're looking for a 2-minute time frame, sure, can you catch a move that lasts an hour? Of course, but like, you know, that like you're not really looking for that. You're looking for setups, you know, that are going to be between 2 and 10 minutes, right? If it doesn't really go in 10 minutes, I mean, Jesus, you know, what are you going to do, right? Some people can handle the 2-minute, some people can't. Some people like the 5-minute, right? The only thing that changes across the time frames is the range. Look at the range on a 2-minute time frame is 12 points. The range on the 5-minute time frame is 25 plus. Okay, so think about it. If you're in on a 2-minute setup, the most you're probably going to lose is 12-15 points. The most. However, the most you can lose on a 5-minute time frame is probably going to be between 20 and 30 points if you give it one full bar. So it's going to be dependent on how much size you're trading, right? If you're trading mini contracts, minis, I don't think anyone wants to sit there and give it, you know, 20, 30 points to potentially stop yourself out. Of course, 20, 30 points is going to be a fantastic winner. You have a cushion, maybe you have something like a 100K account or 150K account, 250K account. Great, you can play those minis. But I would definitely recommend, if you're playing a 5-minute time frame, giving yourself one bar, 20 to 30 points worth of range, you need to be on the micro side trading a $50,000 evaluation account or funded account for a fact. And or you need to be trading, you know, maybe a smaller time frame with a smaller range. That way you can be able to handle that. What's going on, Marie? How you doing today? You make any money today? Sweet, 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 sweet. And again, you know, guys, for trading, I mean, I get it. Like, there's setups that are still going on. This last short setup confirmed, you would have made money. The long setup, you would have made money. The prior short position, I think you would have made money as well. This one you made money, this one you made money, this one you made money. I think maybe there was no trades here. This one chopped you out. This one was a loser. This one made money, this one made money, this one made money again. So how much are you going to push your luck, right? That's what you need to build into your trade plan. You need to build your trade plan to where the hell are you going to stop out on the day? Where the hell are you going to stop out on the day, right? Are you going to sit here? Because again, trading is probabilities, right? Trading is probabilities. So just because you win 2 or 3, 4 trades in a row doesn't mean that your next trade's not going to be a huge loser. So it's almost like you have to be smart enough to catch yourself, right? You got to catch yourself. Like, what's realistic for me? You know, we had we were doing back testing constantly inside Evolution Traders on this strategy, different take profits, different stop losses, blah, blah, blah. There was a day where this particular 5-point take profit went 9 trades in a row before taking a loser. Is that going to happen every day? No. Yesterday, it started off taking 2 or 3 losers right in a row, back to back to back, and then went on a string of winners to get us back to scratch and into the green. So where are you going to stop out at? Where are you going to stop out? Right? You know, for me, I mean, it's like, you know, if I go on 2 or 3 win streak here, you know, if I take a loss, I might think about just walking away and taking my gains. I don't really want to, you know, continue. You know, for some people, you might trade 1 too many contracts, take that first winning trade, and be up $200, $300, and then you're out. You're done on the day, right? The more you trade, the more potential you're gonna have to lose. I'll just tell you that, guys, right now. Who the hell's trade 1348? What's that guy talking about? Uh, Tom, what was it? What was the setup that you took? What was the strategy, or what did you do? I don't know about militant. I mean, I'm still human. I mean, I make mistakes all the time. Not every day is a winner. Not every trade's a winner. But you know, I think it's more so like I've been doing this for so long that it's like, what's the worst that can happen, right? I lose a trade, but it's not the end of the world. I guess I've seen price enough to know that like every day is different. You allow yourself to go down. You allow yourself to go down and get in your head and start doing all kinds of wacky stuff, you know, you're gonna just kill yourself. You know, I got a mortgage to pay, I got bills, I can't. I mean, I got a life to live. I can't really afford to sit here and fucking gamble, you know. I need to make money. Bollinger Band strategy, impatient, trying to long off the bottom. Yeah, the thing with the Bollinger Bands is those things are going to move, you know. Those things are like, again, they're bands for a reason. Those things are going to warp and twist around on you. I use the Bollinger Bands. Again, I use the Bollinger Bands on like my big chart, right? Again, I don't want to scare anyone with this big chart, but pull up a 5-minute time frame. So like I've got Bollinger Bands here. And you're probably not going to be able to see because it's so much crap going on here, but it's these white lines, right? These things are going to move and twist and turn. Like, notice how here we get outside the Bollinger Bands and then it snaps back. We get up to the Bollinger Band and then it snaps down. So what I use the Bollinger Bands for is when I'm in a trade, when I'm in it, let's say I'm in the short. Look at this 5-minute 20 SMA play. I'm in a short, it's through my linear regression, so I've got nothing here until Bollinger Bands. I'm using Bollinger Bands to take profits into, right? It's just an area of supply and demand. So I want to, if I'm in a trade, I'm using it to take profits. I'm not using it necessarily to start trades, because if I start a trade down here at the Bollinger Band, even though it looks great, right? It looks great, and it did bounce. What if I get in, you know, when we broke Bollinger Band and I'm like looking for the immediate snapback, and then I'm trading, in your case, a mini contract, and it goes down another 10, 12, 15 points. I'm stopped out and the move still went in my favor. So you need another area of confluence to put you into the trade and then use the Bollinger Bands to manage your trade. Look at this long, for example. You know, this long runs into the linear regression in the 200. So this is supply. I want to sell into supply. Great. If we break supply, where's my next area of supply? Bollinger Bands. Where's my next area of supply? High of day. I want to sell into Bollinger Bands. I want to sell into Bollinger Bands. I don't want to use this to start a trade. But again, I don't know any, like, I'm not a Bollinger Band trader. Like, again, I just use it as an additional area of supply and demand. That's it. All this crap on my screen, just areas of supply and demand. I mean, if someone was watching a 5-minute time frame here, it was a 5-minute setup short. 19,962 went all the way down to 19,944. Easy scalp there. Easy scalp there. Easy scalp there. Easy scalp there. The 5-minute actually was 4 for 4, right? 6:40 a.m. winner. 8 a.m. winner. 8:45 winner. 9:40 winner. I mean, there's a back test, right? Sometimes I get these smart asses in the comments like, oh, yeah, where's your stop loss? You can never do that for a long period of time. Sure, whatever. Keep it simple, right? Like, most traders, they want things to be like so complex. Guys, we're watching candlesticks. Like you're watching price. It's not like, you know, it's not rocket science. It's buyers and sellers going back and forth. Where buyers want to take price, right? Where do buyers want to take price? Where do sellers want to take price? Where potentially is there areas to bounce? Where potentially is there areas to, you know, hit a speed bump? It doesn't have to be, you know, complex. This is the most simple strategy that you can use. You know, people do it with the VWAP, right? There's a lot of great VWAP traders. What's VWAP? Volume weighted average price. Okay, great. There's an accumulation of buyers and sellers at VWAP. Under VWAP, you want to be short. You know, you can short off the VWAP. You know, we get back over VWAP, maybe you can go long. It's the same thing. What is a 20 SMA? It's a weighted, right, moving average. I had some smart ass say, well, you know, one time, this is a long time ago, I was teaching more options. They said, well, you know, the moving averages are lagging indicators. It's a lagging indicator. You know, you're never going to be able to, you know, predict where price is going because it's a lagging indicator. I want it to be lagging. It's taking the previous 20 bars of data and it's averaging the price where buyers and sellers are at. Okay? Strongest moving averages that you can have on your chart: 20, 50, 200. 20, 50, 200. Okay, because I'm a scalper and a day trader, you know, my 200 is not going to come into play a lot. It's going to come into play a little bit. It's going to come into play a little bit. But again, because I need, as a day trader, as a scalper, I need more areas of opportunity to potentially have setups. So the 20 is pretty good on these smaller time frames, providing multiple setups, okay? So great, I want to know what is the average price of the previous 20 bars of data. So I need it to be lagging. If I had it set to a 1 SMA, it's 1 bar. What the hell good is that going to do? If I take a 3 SMA, change it to 3, it's only going to give me the previous 3 bars of data. What good is that going to do for me? How can I identify any type of trend in real time, right? And, you know, for those of the people out there, well, you know, moving averages are lagging. Great. So if you had no moving average and it was current on the price, it's the bar. It's the bar. How do I know what this bar is going to do, or where can I base structure off of this bar? If I like, doesn't make any sense. You know, look at this price. You know, look at trading over the 20 SMA. We came down to it, we bounced. We came down to it, confirmed, lost it. Great. So price was trading over the lagging moving average. Once we failed to hold, once we failed to break a previous swing high, price got weak. Great. Is there an area of opportunity when price gets weak? Yes. Is there an area of opportunity when price gets strong? Yes. Simple. Now, again, if I'm going to sit here and say, well, when we get over this 20 SMA, guys, you know, this market's just going to push to all-time highs. I can't tell you that. I'm only looking at a 20 SMA. Like I would have to bring in hourly chart, 4-hour chart, daily charts, weekly charts, get more big body structure to you know, see where potentially price could push to. But guess what happens, guys, when you start looking for those bigger levels like that? You're going to have more range. I mean, let's look at the 4-hour chart, for example, right? So this is for swing trading. I'm not a swing trader, right? So where's my ranges at here on a 4-hour chart? Okay, well, we got these highs. We have these lows, right? Got these lows that are marked out here. So this is the range that we're in. If I want to see a big move, well, I'm going to need to hold this previous 4-hour range and potentially push up. However, if I lose this 19,894, I have range to go to the downside. Okay, range to go to the downside. But look at the range on the bars. 127 point range. How can I scalp something with a 127 point range? Look at this one. God forbid 120 points. This one, 143. How can I scalp something with 150 points worth of range? It's impossible. Scalp? Now maybe you can have these levels marked out and scalp the break of them, sure. But let's put this way. Let's say someone got into a trade because we lost this 20 SMA, right? And they said, oh, great, this is coming all the way back down to the previous swing low. What the hell just happened to you? You got smashed for 127 points back up to the upside. What happened there? You're still sitting in this trade down, what is this? 19,928 to 19,974. You're still sitting in this smashed 50 points. Doesn't make any sense, right? Again, what works for you works for you. I don't care what anyone else is doing. And again, I mean, I'm not saying that there's other strategies that don't work. There's a lot. There's thousands of strategies out there. All a strategy is giving you an edge in the market to control your risk. That's it. That's it. Yeah, the ICT, SMT guys, I mean, hey, they have multiple models and areas to take profit and this and that and what they're looking for. I didn't never dive down that rabbit hole because I have no need to dive down the rabbit hole. But I mean, for some people it works, right? I mean, I've got a guy in my room who uses, you know, fair value gaps and order blocks and this, that, and the other, bullet here, bullet there. I mean, I don't know anything about it, but you know what? You know what's funny though is sometimes I will cross-reference with him and we have a good laugh about it. I'll cross-reference with him. Hey, where's that fair value gap, or where's that this, that, and the other? Like, what are you looking for? or you know, your area to break to get in, and where's your stop loss. And I can pull up a lot of times. I've got a same area of supply or demand there with something else. It's, oh great, I see where you're looking to get in at, or why you bounced that. That bounced right off my 50 SMA on a 5-minute time frame. Pretty strong level. I mean, that broke out through the 200 SMA. Great level, great. Our guys, we're all looking at the same charts. I don't care what you have on your chart. I'm willing to bet that you can give me an area of resistance or supply, or resistance or support, and I'm gonna find something very close to it with how I look at the chart. Because you want to know something, guys? All the charts are the same. We're all looking at the same thing. It's just what we're putting on the charts is different. Is there any one that's better than the other? No. Same stuff. Supply, demand, same shit. Moving averages, the supply and demand. Fair value gaps, supply and demand. That's all it is. Previous day high, low, same shit. Overnight session high, low, same shit. Right? Initial balance range, same crap. Supply and demand. Right? This black box is the initial balance. First hour of trade. What is the top? What would we call the top? I would love for someone to answer this. So if the top of this range, we traded up to it, pulled down. We traded up to it, pulled down. What would you call the top of this range of the first hour highs? Can someone just answer me? Just humor me for a minute. What would you call the top of this range? What would you call this? And I'm not talking about, oh, it's a double top. I'm not talking about that. What would you call the top of the range? When price gets here, it's going where? When price gets up here, it's where? When price gets up here, it's what? Someone answer. Supply. Supply. Resistance. Same thing, right? Supply and resistance means the same thing. What does supply mean? Resistance. What does resistance mean? Supply. What is supply? What is resistance? Sellers, right? Someone could also say sellers. There's a lot of sellers up here that don't want price to go any higher than 20,024. Yes, there's sellers up here sitting, right? So some of these people who use like this, those little bubbles, what's it called? Bookmap, and people who read the tape, people who read in DOM and all this stuff, people who are reading the order chain. What's up here? You have sellers sitting up here. How does price go higher? When buyers take out those sellers, those cappers, those people who are sitting up here. There's people sitting here pinning the price down. What would we call this? What's the bottom of the range, guys? What's the bottom of the range called? Should be very easy. What's the bottom of this range called? Simple, right? Demand. Support. So it's like buyers, etc. Same thing, right, guys? So when you're looking at different things in the market, I mean, one could say that the moving average is also an area of supply or demand based on whether we're trading over or under. So right now that we're trading underneath the 20 SMA, is it a supply or a demand zone? It would be a supply zone. It would be resistance until we confirm it and get over, right? So once we lost this demand zone, prices can tend to get weaker. Once we lose the bottom of this range here, the initial balance, and we lose that demand, support, whatever you want to call it, as soon as we lose that, price could get weaker. So there's a bigger trade lurking down here. There's a bigger trade lurking up here. When that's going to confirm, I don't know, right? If we knew, I would be all in on the trade now, sitting in it. We don't. That's all it is, right? That's all it is. I want to show you guys something. This chart's going to get messy here. I'm going to pull up this big chart again. I'm going to pull up an hour chart with all my moving averages. Okay, that same black box is still in effect. Okay, the same black box is still in effect. It's the opening range, supply and demand. Notice where we keep coming down to tagging where the buyers are at, right? Where's the buyers at? Right now, the buyers, there's a lot of buyers in this range of the 50 EMA, the 50 EMA. Then we have this stupid Bollinger Band down here kind of lurking, right? Tag lost a 50 EMA, came to the Bollinger Band. Lost a 50 EMA, came to the Bollinger Band. What's sitting below that? A 50 SMA, okay? So this range, there's a lot of buyers here. Again, what are the strongest moving averages? 20, 50, 200. What's at the top of the range? Where do we get rejected once? The 200, 200, the 200. What's above the 200 and this linear regression? Nothing. You have nothing until the 150 simple and this Bollinger Band, sitting up here at 20,057. So I'll give you guys an example. If price was to confirm this 20,025 area, we have another 25 points of room to run. There's nothing here stopping us. Is it going to go up in a straight line? Maybe. Can it be choppy? Maybe. But it has room where buyers have cleaned up sellers into run to the next area of supply. That's all this market is. A battle between buyers and sellers fighting for price to go down between buyers and sellers. That's it. So I just take a simpler approach. All these stupid lines on my chart, I just tell myself, oh, we've got a lot of buyers sitting here. If we clean up these buyers here, we potentially have room to these buyers. And then we potentially have room to these buyers. And we potentially have room to these buyers. If we clean up this, maybe we have room here, maybe we have room here. So these are all areas of take profit. These are all areas of, stop losses, depending on if you're long or short. Look at, if I'm long here, and I'm a bigger swinger trader here, and I'm in this pullback here, I mean, I've got to be telling myself that anything below 19,950, it's going to come down to 19,038. Do I want to give up another 20 points or get the heck out of the trade, right? I could also be telling myself here, there's a lot of buyers in this area who have bought into price. So I can bounce from this 50 EMA as well and use any closure below the 50 EMA as a stop loss, right? Again, that's another way to trade. Those trades are going to take a little bit of time. You're going to have to sit through a lot of wiggle room, but again, multiple ways to trade, guys, multiple ways to trade, multiple ways to look at the market, but we're all looking at the same chart, So it is what it is. But anyway, guys, I'm all talked out here. I think I'm done on the day. Was able to pass another this morning early. We passed another Top Step 50K account, so that's going to bring my total XFAs up to 3, which is great. And then we're still working on this. What the hell is it at? What the hell is it at? Come on. I'm still working on this 150K Apex account, which I think I'm going to nurse this one, guys. I mean, I can throw on some bigger size here and try to hammer it, but I'm just going to really try to take a slower approach to it. But this thing's up to a balance of 155,675. So we're up around 5,600 on this account. We need 9,000 to pass, I think. Congrats, Marie. Yeah, hell yeah, that's good. Hell yeah. So we got a little bit of work to do here on the Apex 150 account. And then I've got another Top Step account because now Top Step allows those 5 accounts. So we're slowly working on more. We got another one up here to 50,700. So we're up about 700 in that account. I'm gonna take a slow approach here, guys. I mean, there's no rush. Finally got the deposits from the 2 Top Step payouts a week ago. So that's good. So there's no real stress there on those accounts. I do still have a PA account with Apex that I'm slowly working into the pay period. And other than that, options trading has been on fire. Options trading, that's where I spent a lot of my time, especially options trading's been on fire. We've had some great moves. Big trades on the options side of things. So today we took Amazon for 360, 187.50 calls. That was a fantastic move. Still kicking myself in the ass for getting out way too early. I was looking at the first hour candle on Amazon, looking for that confirmation. Got it. Took my money at the ATR, and that thing proceeded to run up another $1.50. And I mean, like, I don't even want to look at it. I mean, I had 187.50 calls, guys. You know, Amazon is trading, it's trading out 193. You know, I took $1.50 on this move, and the damn thing's up $3. You know, but we also had we had the good trade that I went over earlier. The Tesla trade was a very, very good trade, very, very good trade. Those were one, again, don't like looking at the chart once I'm out, right? Does me no good. But I had 190 calls on Tesla. 190 calls. This son of a bitch is trading at 194, 195. It is what it is. But again, you know, I don't really look for those moves, right? I can't be upset because I like the way I trade my strategy. I'm not looking for 4 points. I'm not looking for 5. Would it be great to hold a runner? 100%. But it's not who I am. It's not what I do. So I take my $1.50, and I move along. But all in all, not too bad. 1100 up on the options account, so that's pretty good. But anyways, guys, I'm very talked out here. I think I'm gonna go play some golf with my son and kind of kick back a little bit. It's been a nice day. Been a nice last week or two, right? I mean, here in California, the sun is finally out. I'm sure it's nice and hot. Sun's out where a lot of you folks are at as well. But yeah, I mean, the weather's been perfect. Weather's been perfect. It's a cool, warm 70 degrees here where I'm at in California. So beautiful weather. Beautiful, beautiful weather. Before I get off, where are some of you guys from? Is anyone else from California get the pleasure of waking up with me at 5 in the morning? Where are some of you guys from? Detroit in the city, rainy and cloudy over there in Detroit. Marie, California native, but in North Carolina. Great. What part of North Carolina? Rando Trades, California. Yeah, California is great. It's just everything else sucks about it. Prices are high. Um, Taxes are high. Connecticut, Texas. Oh, I bet it's humid out there, right? I got a buddy who moved out to North Carolina. I think he's close to I don't even know how to pronounce it. Raleigh? Raleigh? Oh, you're just outside Raleigh too. Raleigh too. I don't know how to pronounce that. Yeah, yeah, but he was saying he came into town about I don't know about a month ago. He was saying that he was dreading it. Raleigh, got it. Yeah, he was dreading it because it gets so humid. Florida, super hot. Yeah, I bet. We got a couple of guys in my room from Florida. Oh yeah, Florida is another that's another beast, right? That's another beast. New Hampshire, nice, nice. Grace, thanks for stopping by. In California, I'm in Santa Barbara. Santa Barbara. So Southern California, by the beach. Little beach town. Marie, what part of California were you from? Monrovia, Pasadena. Nice. Nice. It's hot out there too. South of Sac. Nice, Brando. Yeah, I was just in San Jose visiting some family last weekend. San Francisco area. It was hotter than shit over there last weekend. 94. 94 in San Jose. I gotta have like that. Like I'm all for. I love the sun. I love the sun. I love the warm weather. Don't get me wrong. I love to play around in the sun. I need a little bit of a breeze, right? I think I can do the dry heat. I can do the the Arizona, the Las Vegas heat, even though yeah, it's up in the hundreds. I can do the dry. I can't do like that humid Texas South stuff. I can't do that. The humidity just tears me up. Yeah, Brandon, I think we're gonna have a hot summer to be honest. Yeah, 104, forget about it. Forget about it. Pretty sure it's gonna be a hot summer. Way we're shaping up. Because it was gray for months. It was gray for months. Like January, February, March, April. I mean, it was just nothing but gray. Oh yeah. You can definitely do the 100-degree heat dry, but the even the high 80s, low 90s with humidity, forget about it. That's rough. Guys, nice little 2-minute short there. I don't know if anyone's still trading that confirmed. Easy, easy. Just get into these trades as you see them. Again, I don't really we are coming out of lunch, so but I mean, hey, did anyone take that? It was a beautiful trade. Yeah, nice. Take some gains, Marie. Get greedy on me. Get greedy on me. You got a Bollinger Band here at 947. There, it just got tagged. Just got tagged. And there's the bounce off the Bolly. So I think it was Tom. Tom, you see how we play that there? We play that short into the Bolly, right? We play that short into the Bolly and just get the hell out. This thing can go down more. I mean, we're getting pretty close to the lows here. It can go down more. Great. That's someone else's cash. We'll leave it to them. Took the green 20 SMA. Sweet, sweet, sweet. You got another one coming here. This is another 2-minute setup here. I don't know if this you took the green 20 SMA. Which one? You went long. You got stopped out maybe 10 minutes ago. Melissa, the only thing I'll say is, are you cherry picking your plays, right? Are you cherry picking them? Meaning, like, you took the long, so you avoided the short because you just took the loss? Yeah, I see the play that you took, but are you cherry picking? Like, because you took the loss there? No? So did you get in on the short? This last one, did this one confirm? 19,945 to 935. This one hit. This one hit. Oh, gotcha. Yeah, the next one was here. 118. If you're looking at a 2-minute chart, you're looking at a 5-minute chart. There was nothing on the 5, so it must be the 2 you're looking at. Stop below the reason. Okay, gotcha. So, how much size were you playing? Like, how many contracts? We're gonna fix you. We're gonna fix you up, Melissa. We're gonna fix you so you start getting more profitable. 2 micros or minis? I'm assuming micros. Yeah, that's cool. So great. So I mean, it's not that big. It's not a big loss. It's more of just like it's annoying, right? It's like a mosquito. Like, oh, I took the long and I just got stopped. It's like a mosquito that doesn't leave you alone. Um, that's fine because you're not gonna. Well, how many points are you looking for to take profit? Because that long, like, what's your take profit at? I'll fix you real quick. So where's your take profit? How many points are you looking for on each particular trade? Okay. So let's do this. Let's do this. Let's do this. Do this for if you're serious, do this for the next week. 5 points take profit, 15 point stop loss. Yes, when you lose one trade, it's going to take you two to break even again. I understand that. Your win rate percentage is going to go up tremendously. Looking for the 10 points just because the reason why was almost 20. I understand that theory, but when we're trading, when we're kind of just trading in the middle of a range like this, and we're pulling up to a bunch of supply, like how we haven't really taken out the high of day, we haven't really taken out a previous swing high here. The momentum shift is still down. Let's move. Let's put a hard stop loss at 15 points. Let's put a hard take profit at 5. Run that for a week. Run that for a week, and then, when I pop back in again, let me know how that goes. You'll do a lot better. Yes, you're going to take some losses. Yes, it's going to take 2 trades to get back to scratch. You can still do this on, I would do it on, let's say, 2 micros. Do 2 micros or 3 micros. You're not going to make that much money per trade, but what it's going to do is help you build and gain the confidence. Because I can just quickly back test if you were running that particular strategy, if you would have made money or not, just from market open. Yeah, just from market open. We had the first one was short, that one hit, that's a winner. Second one was short, that's a winner. Third one was long, that's a winner. This one did not confirm, this is not confirmed. This one puts you in drawdown 970 up to 985. This one might have stopped you out here because it was 15 points, or you can run a 16 point. Right now, I'm kind of running like a 15 point stop loss. Again, I'm doing it manually. I have a hard take profit, but I'm kind of doing that stop loss manually. But I'm running a $200 to $225 stop loss. So on one mini contract, that's putting me like at around 10, 12 points. It's okay, but I want to, since you're on the micro side of things, I want to give you just a little bit more wiggle room to potentially let these trades work out. This was a winner. This one did not confirm. This was a winner. This one confirmed. That was a winner, but put you into drawdown 63 to 52. So your 15 point stop loss would have been okay on this one, even though it got dicey for 6 minutes, 8 minutes. Still would have hit your profit. This one here, 997 to 991. This one also hit. This one hit 14 to 20. This one was very close. I don't know if that one hit. That's very close. So maybe you're looking at 5, 6 winners there. Winner, winner, loser. You're probably looking at like 7 or 8 winners, 2 losses. You were running it like that. That's why I asked if you were cherry picking, because again, a lot of times traders will take this trade that you took. It didn't really confirm. I mean, it did confirm, excuse me. It did confirm, but it didn't confirm your take profit. And then they'll kind of like, get gun shy, or I'm still in the trade. Just set a hard one. And when the new one sets up, or you can even do this too. Let's say, for example, the long play that you were in, as soon as it closes back below the 20, you can also use that. just get out. Like once it closes below the 20, instead of giving it the full reason, just get out once it gets under the 20. Yeah. So that, yeah. So like in that particular case, since you're going to run a tight take profit, just get out of the trade if it closes back below the 20. So that way it gives you enough time to take the confirmation on the next one, if that makes sense. So instead of waiting for the reason why candle, you're almost just going to get out when it closes below the 20 and then start a new trade versus waiting for it to take out the reason why low and then you missed the short. Advice, yes, because of size. Yeah. So again, you have to adjust your take profits and stop losses based on size. So that's how I manage risk. It's not like how many points it is. I don't care if it's a let's I've used this example in the past. Let's say you're giving yourself 100-point stop loss, right? No one's going to do that, but I just wanted to give you guys a worst case scenario. 100-point stop loss on one mini contract. Would any of you guys take that trade? Risking 100 points? I don't think so, right? One mini, 100 points on one micro, 200 bucks. It's not going to blow your account. You can risk 100 points and you're only going to, the max you're going to lose is $200 on one micro. You see what I'm saying? So your risk always has to be dependent on the number of contracts that you're playing. I would always start someone off who's just getting their feet wet and building confidence on micros, between 2 to 3 micros at a time, and then building that confidence up to just, you know, take those trades. Just let the numbers stack up. 1 trade, 2 trades, 3 trades, 4 trades, and just continue to roll on that, and then gradually increase size. If you've been doing this for a little while, you kind of have a better grasp of it. Yeah, you can throw on a little bit more size, but yeah, I hope that helps, Melissa. It should help. Again, we've been doing so much testing in my community. I mean, again, I'm not putting the carriage in front of the horse yet, but I mean, we're getting like 80% win rate here, assuming that the operator, aka you, aka the human behind the screen clicking the buttons, just does what you're supposed to do. Again, we're not perfect, so we're always going to screw things up, but assuming, you know, you can pop off 80% win rate on this. The amount of money that you're going to make, I don't know, right? I mean, someone trading 10 mini contracts on $1 million account obviously can have the drawdown to afford it versus someone who's trading on a 50K prop firm. But I'm just saying the strategy win rate is 80% right now in this current market environment. It could change, right? Market environments change, but right now we're getting like 80% win rates, and we're kind of just calling it a day after 2 or 3 winning trades. Anything over $100 in profit, just calling it a day. I hope that helps. Again, I'll be around. You can always ask questions. Again, you know, you never know what's going to work and what's going to lose. So we're kind of every day just figuring it out, right? Stay confident. Never put yourself in a position where you're going to lose your entire account on one trade. Obviously, don't do anything stupid. But yeah, I'll be around, guys. I hope you guys all have a rest of a good trading day. Stay safe. If you are green, consider locking it up. There's still a lot of time left in this market. But again, you know, typically after this time, lunch, I don't really like taking trades. It's a lot of choppiness action that, generally speaking, just kind of get algos that, you know, either just run in one direction or just chop you back and forth. I'll see all of you guys on the next one.